Hello everybody, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is May 23rd, 2019, Thursday, and we are now in the final hour of the trading day. And what a day it is. We've had a huge down move today on tariff and China fears. As many of you know, the reason that I wait until the end of the day to make my trades is because I feel that the closing prices are the most valid and give me the best data for me to make my entering and exiting decisions. So that is why I prefer to make the majority of my trades during the last hour of the market, as close to the close as possible. So boy, what a day we are having. I hope everyone is staying safe out there and respecting the market. What we're going to do today, first off, we're going to run the government required disclaimer. That's about 40 seconds. We'll get that out of the way. And then we are going to take a look at the markets in general. We're going to take a look at the large indexes, see what's happening there, big picture. Then we're going to take a look at my current positions and when I got in them, why I got in them, and how I'm going to manage them moving forward. Then we're going to go through my watch list one by one, take a look at the technical levels of each stock, see if there are any setups for today for us to enter during the last hour of the market. And then when we're finished with that, after the market closes, if there are any questions about the day's activities, or if you want me to take a look at any stocks, I'm very happy to give you my opinion. So that'll be after the market closes. When that happens, let me know, and happy to answer the question. So first of all, let's just go ahead and run the U.S. government required disclaimer. It's about 40 seconds, and I will be back with you after that. So hang tight.
This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much.
All right, got that taken care of. Thank you so much for sticking with me through that. So, all right, boy, it is an ugly day, folks. Hope everyone is staying safe. Before we get to my current positions, let's take a look and see what the major averages are doing today. So, all right, here we go. You can see the Dow Jones just gapped lower this morning and just kept on a-trucking. So, a close back above the 200 would be an interesting entry point here. But I would not be interested in getting in this now. I just feel like we're in purgatory. This 200-day moving average and or the 30 RSI is going to usually acts as some kind of strange attractor. And the reason why is that a lot of professional traders will not start to buy until they see that it has tested this 200-day moving average. They want to see some confirmation that it doesn't want to go any lower. They don't buy just in advance. Anticipating. Some do, but I would say the majority of professional traders wait to get some kind of confirmation that it's going to hold. But I think it's very likely that we could go down to here. But I also think that if it does go down below the 200 and back above, I think that would be a good entry point and give us a good risk to reward ratio going forward. The Qs. Same with the Qs, down 2%, gap lower, now making a lower low. I believe that somewhere in this area would be an excellent entry point. Same with the Dow Jones. If we're able to test this 200 or the 100, which is the red line, or go under 30, back over 30. Somewhere in this area, I think is going to be a good sweet spot to potentially enter the Qs and get a good price on it, at a price that should hold. And if it doesn't hold, then you've got a small loss if you are wrong. So I'm going to be patient, sit on my hands, and see if we can get the price to come down into this area. The SPY, same as the others, gap down, slightly off of its low, which is positive. But again, down in this area where I have this line drawn would be a good confluence of signals, where you have the third ATR channel and the 100 upward sloping 100-day moving average. So, another day or two like this, we will be there for sure. The IWM, which is the Russell 2000, made this little wedge here, and then we broke out of it strongly today. So that is not positive at all. So, yep, let's all be careful. Make sure that we position size correctly, because this is very volatile. I think there's a lot of fear coming into this market. So, as always, regardless of whether the market's up, down, or sideways, it's important to always, first of all, make sure that you have a small position size in any particular trade, so that any particular trade cannot really hurt you or destabilize you. The maximum amount of positions I will ever take is 60% of my account value. So, let's just say I had a $10,000 account value. I would never have more than $6,000 in positions. And people say, yeah, but if it goes up, then you're leaving all that money on the sideline. And I say, yes, that's true. But on the downside, if I'm 60% invested and the market goes way down, it's unfortunate, but because I only had 60% of the money invested, I don't feel like I don't get destabilized. And what happens is when you get price action that destabilizes you and you have a full position, you have $10,000, you have $10,000 invested, and you get punched in the nose by the market, a lot of times you are hurting, suffering from the blow, and you may get a really good entry signal that happens, but because you're so demoralized from what just happened, you may not have the stomach for it to get back in. So, this is a real thing. This is a real thing. You have to have the correct mindset to be able to take a good trade when you see it, instead of, man, I just got walloped, I don't feel like getting beat up again. I know it's a good trade, but I don't feel like getting beat up again. And a lot of times that's the trade that really works for you. So that is one of the reasons why the maximum I'm ever into of my account is 60%. And I'm very rarely into that. So just make sure that you do not become destabilized. Keep your wits about you. And that starts with proper position sizing and not having too large of positions. That's the key to not becoming destabilized. Okay, so with that said, let's see. Mount Doji, hey, how you doing? Mount Doji says, hello, all safe on my end for this bed day. Oh man, glad to hear it. Dr. Jorgensen says, I should be playing golf. You should. Better than this market. Playing golf would be better than this market for sure. Dr. Jorgensen says Dow and Q's 200 may not be low enough with Trumpy and his trade problem. Yes, I agree. It is hard. It is hard to know. All right. Let's take a look here. All right, so let's go through my current positions and let's talk about where I bought them, when I bought them, how I'm going to manage them going forward. So I bought Canopy Growth here on the 21st of May. I bought it because we have a V2 entry. A V2 incorporates 3 bars, day 1, day 2, day 3. Day 2 goes under day 1, washes it out to the downside, and day 3 comes back, closes above day 1's close. Sorry, the gardener's out there. He'll be done in just a second. But this was a good V2 entry. At the same time, we also went down below the 100-day moving average, closed back above it, which is also positive. And on top of that, we also went down below this previous low, rejected, it came back up. So we have a V2, we have a rejection, a close below the 100, close back above, and also a false breakout to the downside and back above. So yesterday I did hit 2 profit targets, about 22% of my position that, excuse me. This is a counter trend trade. No, sorry. Well, let me see up here. Oh, yeah. All right, yes. So I did hit about 22% did take 22% of my position off yesterday, which I am certainly glad that I did, because we had this huge reversal. So I was able to take some actual profits, and lock those in. And then on today's down day, I have fewer shares that I have to take a loss on. So it's a win-win, both to the upside and to the downside. So there's 2 ways to handle this trade. Yesterday, it did get above the 50 RSI and it held. Today, it is now, looks like it's going to close below the 50. So I am going to go ahead and just close this position out at the end of the day, unless we somehow magically can rally into the end of the day and close above the 50 RSI. You could make a case that you could keep this because it did test the 100 and close back above. But going into this trade, my plan was, if we test the 50 and we reject it, I'm just going to get out. So that was my plan. It's important to stick with your plan. I know your mind can, go, well, geez, Greg, but it held this, let's give it another day. That's that hope factor that all traders have. And it's not a good thing to have, really. I would say 8 out of 10 times it does not go your way when you're just hoping, because look what we did. We lost the 50-day moving average. We attempted earlier in the day to go above the 10-day and the 50-day, but then we lost it all. Yes, it's great. It's good that it's holding the 100-day moving average, but anyway, not my plan. My plan was, if it gets up to 50, closes back below, to get out. So I will be getting out of Canopy Growth. Probably taking a small loss. Like I said, 22% I hit a profit. My entry point was here, so it's going to be a very, very small loss, and that's what you have to do with your trades. You have to have small losses, big wins, small wins, or scratch trade. Those are the only allowable scenarios to be a profitable trader. So let's hope this rallies into the end and turn a 10-yard loss into a 6-yard loss or 7-yard loss, something like that, but we'll see. Mount Doji says, I've been trying to get back into the queues, but not anytime soon. Yep. Well, we'll get to those. I have an area that I'm interested in, so most likely I will be getting out of the queues today. All right, DDM. I did get into DDM, which is the double leverage Dow. Back on the 15th of May, I got in this because we closed below the 200-day and then closed back above the 200-day. I did take 2 profit targets the very next day. I took 2 profit targets here. So this was a counter trend rally. So I took 20, 40, 60, 80. So I only had about 20% of my position that I got beat up on today. So we will be getting out of this because we closed under the 200-day, but this is still a profitable trade. So that's the magic of phasing out. You phase out to the when you phase out into your profits, which is nice because that locks it, puts it in the bank, but it also reduces the amount of share size that you have. So if you do get something like this, you're only taking a loss on a smaller amount of share size. So closing under the 200, definitely will be getting out of this today. Just hope that it closes a little bit higher, but who knows? We have no control over that. So I will be getting out of the DDM today for a profitable trade. Oh, and one more thing. This DDM is a double leveraged derivative of the Dow Jones Industrial Dow Jones. So, if I normally were to take a 10% position size on my trades, I would take a half of that, take a 5% position size, because this is double leverage. So keep that in mind. All right, Google. I did get into Google here on the 20th of May. Why did we get into it? Because we had this huge, big, strong momentum bar up, went up one more day, came back down, held the 50% mark of this large bar. And whenever you have large bars up or down, you will have some intrinsic support about the 50% of those bars. So we did find some support here. We also tested the 200-day, closed back above it. Yesterday, this day here, wait a minute. Yes. All right. So we entered here. I did hit one of my profit targets the very next day, took about 22% of my profit off and locked in those gains. Yesterday went up, but did not hit a profit target. Today, obviously, we have the big reversal closing under the 200-day. But again, at least I was able to take 22% off of my position for an actual gain. And when it reversed back on me, now I only have 78% of my position. That's going to hurt me for a loss. So this was a losing trade, but it was mitigated by the fact that I took profits. And so if you have not seen my video on my YouTube channel about where I take profits and what the formula is for my phasing out, if you have some time, watch it, because it's a huge part of my trading. It makes a huge difference in my trading with my P&L. So I think it's worth watching if you get some time. So Google, I will be getting out of this position because it's closing under my initial stop, which was halfway of the bar and the 100-day moving average. All right, IBB, I entered here on the 21st of May. And why did I enter this? Well, we have this beautiful V2. Here's day one, here's day two, here's day three. Day two washes out the low of day one. Day three closes above the close of day one, giving us the V1. And in addition to that, it makes a higher low. This low is higher than this particular low, which I like. We did, now I can't remember, and I don't think we did hit a profit target on IBB yesterday. Now I'm not 100% sure. Actually, let me take a look real quick. No, we did not. We did not hit a profit target. I think we got close, but we didn't get there. So it did not hit the 50 RSI. My plan was if it tested the 50 RSI and rejected, I would get out of the trade, but it did not. So where is my stop going to be on this? Well, this is day one, day two, day three. Day two is the washout bar. Halfway of this bar is where it should hold. So I will give it to a close under this red line here, which is halfway of this bar. I will give it a little room to breathe until we have a close below the halfway of this bar, because that would invalidate the signal of the washout bar. So we are down today. It looks like it's rallying off its low. We got in here, so we are underwater on the trade. This was under the 200-day moving average, so I did only take a half position on this trade. Actually, the only position that I had today that was a full position was Google. All right, finally, something that went our way. Silver. I did buy silver here on the 20th of May. Why did I buy it? Well, it went under the 30 RSI intraday and then closed back above the 30 RSI. So the market tested the price under the 30 RSI of silver. It was able to go from under and close back over, which is a positive sign because there are buyers in that 30 RSI range. So it tested it Not only did it close back above the 30, but it also closed back above the negative third ATR channel right here. Yesterday, or 2 days ago, it just kind of moved sideways. Yesterday, tried to go up, reversed back a little bit, missed my profit target by one penny actually. And today you can see I have gotten out of 3 profit targets. This is a counter trend trade. So I phase out of a larger percent of my holdings in a counter trend trade than I do in a trend trade. So in a trend trade, generally somewhere between 10-12% at each profit target. This is a counter trend trade. So I was about 22% at each profit target. So out of about 60%, 66%. So I've got about 34% of my position left is all. But the reason I get out of the profit targets in a larger percentage is because I just feel like we're looking for a bounce. I just feel like we're pulling the rubber band down, and it should snap back. And that's exactly what happened. But it's a mean reversion trade. So I don't feel like it's just going to head on up. I just looking for that snap back. And so when it gives it to me, I take a larger percentage. But as you can see, we got one of the profit targets right at the high. And that's the beauty of profit targets. Phasing out profit targets, you always seem to get something right near the high. So, now I've got 36% left of this trade, which is great. So what am I going to do now as far as handling what I have left? Well, we'll just have to see if it keeps going. I'll hold it. If it gets up to the 50 RSI and rejects it, I will get out of it. If it closes back probably under the low of today's bar or any low of the previous bar going forward, that will probably also be a reason for me. So anyway, really glad that we had this. Glad that we could lock in some profits on this. It's a down day on my end, but my losses were mitigated by having silver and also actually having I was short Visa. So that's the plan on silver. All right, SPY, as many of you know, I'll just run through this real quick for those who haven't seen this, but I buy the SPY every day at the end of the market and I sell it first thing in the morning. And why do I do that? Well, based upon this study, since 1993, if you would have bought the SPY on the open in the morning and sold it each day at the close, you would have actually had a negative 5.2% return. But if you did the opposite and bought on the close at the end of the day, sold on the open the next day in the morning, you would have returned 568% since 1993, meaning that more than all performance came in after hours trading. So you can see from the chart, the green line is the buy in the afternoon, sell in the morning. The red line is the buy in the morning, sell in the afternoon. Long term, this definitely is a profitable long-term system. It does have drawdowns. You can see here from 01 to 03, it had a horrible drawdown, right? But you have to look at take this in the long, you have to take the big picture here and look at this as there's good back-tested data on that is a good long-term approach. So I've gotten beat up in the last 2 weeks using this, but still net positive since I started using it. So I will continue to purchase the SPY every day at the close, sell at the open. You can see let's see, I think that's wrong. I bought it here at the close. Not sure why that's, but yeah, I mean, I bought this at the close, and this is where we closed yesterday in this area. But you can see from here to here, I did take a loss overnight. Better that I got out in the morning though, because it is lower than where I got out. So I will be buying this again today, but this was an overnight loss. USO. All right, this was the big killer of the day. I did buy this yesterday because we tested the 200-day moving average, then closed back above it, and then we also were in support from the previous low. This is an example. It was a horrible trade. I was glad that I had half a position size, but Generally, I wait till the end of the day to make my decision. But if you have a huge day that goes against you, you can't just wait and wait and wait till the end of the day to make your final decision. You have to have an emergency stop if things really go against you before the end of the day. And it did hit my emergency stop today. My emergency stop is 5% from my entry. So right about there. So intraday, it did hit my 5%, and that was it. So this is a good example of position sizing. I mean, imagine if you had a huge position size in this, right? I had a 5% position size, right? And I had a 5% position size and a 5% stop loss. I only had a loss of 0.25% of my trading capital. And that's the key. Even if you have huge days, you have to position correctly so that your losses, you only have small amounts. I mean, can you imagine if you would have bought 100%, you would have been down 5% in one day. I mean, you just can't do it because you never know what's going to happen. Would I take this trade again? I would. It tested the 200-day. It has support here, but you never know what's going to happen overnight. You just never, ever know. Bad announcement, a tweet. So again, I know I tell you this all the time, but it's so important, people. Make sure you position size correctly, small position size. So yes, so it did hit my intraday stop. I had to get out. Right now it's at a 32.27 RSI. I do not believe it went below the 30 today. 30.87, yeah. So, I may be looking for another snapback trade on this. But just like we had on silver, but it would need to go underneath the 30 RSI and then close back above, and it has not done that today. So this was a whopper, but I'm just glad that, one, I followed my rules, got out at my 5% emergency stop, and that I only took a half a position. But I would take this trade again. All right, Visa. I did short Visa. Uh-oh. There we go. I did short Visa here on the 16th of May. And why did I do that? Well, boy, something's wrong with my chart here, guys. We had this high. What is going on with my chart? We had this high. It was a double top that got rejected. It's called a turtle soup. This is one of Linda Raschke's approaches, but we did this top here, did test this top here, and then close back underneath. That's a double top with a rejection of the new range. We also had a reading of the RSI on this previous top way up here. This new top was way down here. This is an RSI divergence. That is a bearish signal. And we also have a ATR divergence. Here's a ATR channel 1, channel 2, channel 3. At this previous high, we got about 3.5 ATRs at this reading. Over here, when we actually went higher, we were not even, we were like 1 3/4, 1 7/8% compared to 3.5. So all sorts of bearish indicators here. Double top that got rejected, RSI divergence. This is high, this is low. ATR, we're at 3.5. Here we're at 1 7/8 or whatever. So this was this is where I shorted. Yesterday, my stop was a close back above this previous high. We did hit one profit target for 22%. Down here, we locked in some profit, then it went back against us. As you can see today, we hit two profit targets. These are 22% profit targets, 22, 44, 66. So I've only got about 33% of this position left. Today is a very tough one because see the blue line, that was the 50 RSI. So it did test the 50 RSI today and now it has rejected it. So, most of the time we do do stuff to the long side where if it's under 50, it goes up to 50 and then closes back below 50 RSI, we get out of the position. Well, this is a short position, so it did find some support at the 50 RSI. So if I'm in a short position, I'm most likely going to close out this position unless it closes under a 50 RSI. But if it closed right here, right now, you can see we exactly tested the 50 RSI. And so if it does close above here, I will be getting out of the trade and locking in my profits. So really glad that I had silver today that helped mitigate the loss, and really glad that I had Visa, the short position on Visa that mitigated the loss. All right, let's see. Dr. Jorgensen says, hi-ho silver, write it up. That's right. Mount Doji says, this week couldn't have been way worse for me. I'm slowly understanding more and more each day. It could not have been worse for you. It was a bad week, Mount Doji. All right. Well, I'm glad that you're starting to understand what we do and how I look at the market each day. But any questions, just let me know, okay? All right. Well, let me take a look real quick at my... All right, yeah, well, we are rallying a little bit back, which is good. All right, so we have about a half an hour. Let's go through and let's take a look and see if there are any potential setups for today. Okay, so here's Apple. We did come down close to a 30 RSI, and you can see this is a kangaroo tail, which means it opened at the top, went all the way down, closed back near the top. It did test the waters underneath the 100-day moving average, and it did close above. So, you know, it got almost a 30 RSI, closed back above. I will be taking a half position in Apple today if, oh, sorry about that. If we close back over the 100-day moving average, which is 179.58. So that will be my line in the sand. If it can close back above there, testing it intraday and also testing that 30 and closing back above, I will go ahead and add some, I will add a half a position to Apple here. If it closes anywhere back under the 100-day moving average, then I will just get out tomorrow. So it's, you know, it's a precarious area to be in, but the 100-day moving average does give me a well-defined risk to reward ratio. And there's a good chance that we could rally back up if we're right up into this range. If we're wrong, you know, it could go down very small and take a very small loss. So Apple is on my watch list for the end of the day, but only if it closes above 179.58. Amazon, big down day today. Held that 50, tested it 1, 2, 3, 4 times, and then today broke. So where would I be interested at Amazon? Down in here. I think it would be a sweet spot to buy this down here. If we could get a 30 RSI and a 200-day convergence, I think it would be an excellent spot. But let's, you know, be patient. If it closed back above the 50 strongly, that might also be an entry point for me to the upside. But as it is right here, it's in kind of purgatory. Boeing has rallied off the low, certainly, but at this point, boy, I would, you know, it's possible that it could trigger a V1 right here, but then you have the 100 above it. Honestly, it closed back above the 200-day moving average to the upside, or a 30 RSI to the downside is where I would be looking to buy that. Alibaba. You know, if this closed, currently we're at a 28.72 RSI. If this closed back above 30, I would consider it, like the trade we have with silver. But right now, unless it closes above the 30, I will not be doing anything with Alibaba. But we'll mark it and we'll see. Caterpillar. Did Caterpillar test the 30 RSI today? No, it did not. So For me to do anything with Caterpillar here, I would have to the downside. I would have to have it go down below 30, back above. And keep in mind, even if I took that trade, that's a snapback trade. That's a mean reversion trade. That's not like I think it's the bottom. I just think it's a short-term bottom, and I want to take advantage of a 2 or 3 or 4 day rally. So nothing on Caterpillar. Canopy growth, we do have. It's 45,672 RSI. So if it closes under the 50 today, I will just go ahead and get out of the position and be grateful that I did hit some profit targets yesterday. Cisco, big down day today. Tested the low of this gap up low. See how we gapped up? It did test that low. That is a positive sign, but for me to get interested in this, I would have to have the bars move sideways and have a stab down, reverse V1, V2, back up, or a deeper dip buy. All right. DDM, we did buy here. We phased out. If it closes under that 200 day, I will get out of this position today and lock in that loss. Dow Jones, you know, to me, a close below the 200 day moving average and close back above would be an excellent place to enter this, but it's not there at the moment. I did add Disney to our watch list. It has been holding up relatively strongly. Hasn't been going up much, but it has been moving sideways, so it is stronger than the rest of the market. You know, whenever you have a sideways move, generally it's going to break one way or the other. You don't know which way it's going to break, and you don't know when it's going to break, but you can be pretty confident that eventually it is going to break one way or the other. You can see today we did take out the low of the previous day. If tomorrow we are able to trigger a V2 would be this bar, and then the next day, day 2 washes out the low of day 1, and day 3 were to close back above this line here, I would buy that for sure, 100%, because this is called a squeeze play. Squeeze play is when you have a nice move up, you move sideways, you spike down, and then you reverse. So if tomorrow we were able to close above yesterday's close here, I would 100% buy that, and I would buy a full position because we're over the 200-day moving average. But I love these kind of plays where you go sideways, you go down. If and only if it goes back up, it shows that a lot of these prices here were invalidated and that these prices were too low. And here you have a nice long area to move up. So definitely be watching Walt Disney tomorrow. And actually today, if it triggered a V1 today, I would also do that. But that seems a lot to ask today, but we'll see. eBay. Nothing really interesting there. Facebook, pretty big down day. For me to get interested in Facebook, I would have to have a close below the 50 and then it close back over the 50, or some kind of fractal, a break of a fractal. Here we have 2 lows to the left. We don't have 2 lows to the right, but looks pretty positive to me that tomorrow is going to be a down day or a sideways day. Maybe it'll go up, but if it doesn't, then it will set up the fractal, because we'll have 2 higher lows to the left, 2 lower highs to the right, and that would be a good fractal to the upside if it triggered. So nothing on that. 5 below, relatively strong today. Same with Facebook. If we have another sideways day, then this is going to be the fractal, and a move back above here would be a good entry point, because it would bring us above 50, and we have some blue skies above. But you know, you can tell, look at all these other charts, then look at 5 below. 5 below looks better, it looks healthier. Gold, pretty big day up today. Where would I be interested in gold? I would have to wait for the 5 EMA to cross over the 20-day EMA. That's a good, profitable, long-term back-tested system, but the entry signal on gold is only when the 5 crosses back over the 20 for that mechanical system. So interesting, we had this big day up, right? Now we've come back, kind of holding around that halfway mark. It's interesting how that always happens. That 50% has that intrinsic value in it. Google. Oh, wow. Well, listen, Google's come way back. Oh, we might be able to stay in this trade. I would have never, ever thought that. So let's take a look here. 1143.62. All right, so $1,143.62. All right, if it closes above 1143.62, we'll be able to stay in this trade. How about that? So we'll have to watch that. Goldman Sachs, big down day. Yeah, nothing really we can do with Goldman Sachs there. Did test the third ATR channel and close back above, but not enough. Let's see, did that get down to 30 today? 33, yeah. So I want to see that go under 30 and back over 30. IBB, we talked about that. This is my stop on this. This is the halfway of the washout bar. So as long as it closes above this particular line here, I will be keeping this one. So this looks like one of the only ones I'll be keeping. Intel, big bar today, guys. Look at that. And has not closed above 30. We've been under 30 this entire time. I'm not surprised. It got pretty close to 30, actually. Let's see. Yeah, it did get above 30, and that, usually the 30 holds the support underneath you, but now it's having the support over you, on top of you. This is a bullish engulfing candle where the range of today's low and high is higher than the range of the previous day. If this, and it's up 50 cents today on a day like today. Let's see what the market's at. Oh, the market's only down 335 now. So this is interesting. If it closed above 30, we could potentially buy it. I would only buy a half position. So let me work my numbers on that. So that if it does close above, I know how many shares I will be buying. All right, so I will mark that one. IWM, no good, no good. Coca-Cola, I think Johnny had, hey Johnny, I think Johnny has Coca-Cola and it's up today. Good for you, bud. Good for you. Oh, you fixed Intel by selling it yesterday. That's what made it go up today. Yeah, I can identify with that emotion, Johnny, for sure. It's funny how we all think that way, right? But at least you got Coca-Cola. At least you had a good day up yesterday in Coca-Cola, right? So if I were in Coca-Cola, I would be targeting the 70 RSI here, or a close below one of the previous day's lows. So if I were holding Coke here, I would be keeping it. Lockheed Martin. Dr. Jorgensen says sell at the 200. Yep, you're absolutely right. We have sold those Q puts today and also the Apple puts. So we've got a lot of technology, but let's take a look at that tomorrow, Bruce, again. Okay, where were we? MasterCard, double high, reverse. Don't want to do anything with this because we already have Visa. Merck, strong day today. I didn't buy Merck yesterday. I like the setup, I do, but it's getting a little too high up to the third ATR channel on the 70 RSI. So I'm hoping this will come back down into here halfway. Then I can add the position there. Okay, Microsoft down today, really nothing there. On the positive side, it is holding the 50 RSI, but that's about it. Netflix, nothing there either. Nike is starting to pull away from the 100-day moving average. Possibly a buy down here at the 200 would be a good spot. You know, it's important, folks, to just take a look at the chart. See, these would be good levels. These would be good entry points, and just get over the fact that you have to wait. Just wait. Be patient. Wait for it to come down there. Because if you just buy it intraday, you can always make a case that you're doing it impulsively. But if you say, okay, within the next week or 2 weeks, if it gets down here, I'm going to buy, that is not an emotional decision. That's a well thought out, planned decision. So it's not impulsive. So try to figure out in your head, am I making an impulsive decision, or am I making a good long-term legitimate decision? And there's a big difference. So Philip Morris, you see we have this nice V2 today. We have day 1, day 2, day 3. Day 2 washes out day 1. Day 3 is closing back above the close of day 1. It's a 53 RSI. We're still in the channel. I kind of like this trade, to be honest with you. You know, it's a safety play, because there's a lot of money going into safer assets, and tobacco would be one of those safer ones. So let's look at the weekly. Well, it's moving sideways. I mean, this probably is going to move one way or the other, but I do like this trade. It does have the 50 above it. I do realize that, but everything else is positive. This is a nice V2 entry. Day 1, day 2, day 3. Day 2 washes out day 1. Day 3 has to close above day 1's close. So we'll watch this at the end. It did hold the 50 RSI, and it is above all these other moving averages except for the 50. So I'll be watching that. PayPal, nothing interesting there. Qs, I would be interested in buying the Qs down in this range. If we can get into a 30, 33 RSI range at the same time we're to these major moving averages, I would be interested. But right now at 37.22, not deep enough. Silver, we did phase out of about 66% of this position today based upon this snapback trade. So grateful for that for sure. SPY, we'll be buying this at the end of the day. Bought this yesterday at the close. Sold it here first thing in the morning for a loss, but it is lower than where we sold it. So that's good. So we'll be looking for a gap up day here one of these days or one of these weeks. AT&T, nothing on that. I did buy AT&T here and had a nice few day trade all the way up to here. That was a great trade. It hit the 70 RSI and then closed below. That was my exit point, but that was one heck of a trade. It was about 3% to the upside on AT&T. Look at bonds, folks. This means a lot of money is scared and it is going into the safety of bonds. And we had a big, strong day today. Look at the volume. So on the other side of this, you see how we're to 69.64? We did get over 70 RSI today at one point. So if we closed under the 70 RSI and I were in this trade, I would be exiting my position here. It's 69.61. If it closed above, I would be exiting. All right, Tesla. Tesla did form a little V1. I wouldn't be interested in that till it got over the 30. Natural gas just moving sidewards. Oil, we talked about that. I bought this because it had support at the 200 in the previous range, but it just puked on me. So I had to take intraday 5% emergency stop, but thankfully it was only a 5% position size. Visa, it's at a 50.23 RSI right now. So, we are short this and had a nice day today, obviously. But if this closes over 50 RSI, I will be exiting my short profit and just locking in the profits. VIX looks pretty good. Looks like there's a fractal there. Let me see. No, not a legitimate one. All right. So anyway, nothing with VIX, but you can see the VIX prices go up when the S&P puts get more expensive. So there's fear in the market. Verizon, I did buy Verizon here. Was it here? Yes, it was here, and had 2 monster days. Hit the 70 RSI, closed below, so I got out, but it was a nice 3% profit on that particular trade. Energy Select, just like oil, it would have to close under 30 and back over 30 for me to be interested. Real estate is up a little bit today, and healthcare not doing much. I would be interested in healthcare if we could break above this 200-day moving average. So, all right, let's take a look then at potential entries today. And the potential entry today looks like Apple has now lost that entry point again, 179.58. So let me write this here. So if Apple does close above the 100-day, which is 179.58, I will buy a half position using the 100 as my stop. Alibaba does not look like it's going to hang. Disney, no. Google, it's going to be close. 1143.62, and it's very close. It definitely could close back above, in which case we would keep it. Intel, it's a big strong bar, a lot of volume, but remember, we have to follow our plan. If it closed above 30, I would consider taking it, because not only did it go under 30 and over 30, but it also would be a bullish engulfing bar, where today's bar is lower than this, and actually the range is lower than this bar and higher than this bar in the same bar. So we'll see, but it'd have to close over 30. Eli Lilly, no, I was actually looking at for a put, but let's clear that up. And Philip Morris, it does look okay, so let's, all right, so let me take it my current positions here. CGC we're going to be getting out of. DDM we're going to be getting out of. All right. IBB we're going to be holding. SLV we're going to be keeping. SPY we're going to be buying at the end of the day. Oil, we are already out of oil with the stop. And Visa, we're going to have to watch for a close over the 50 RSI because we're short. So we're going to have to do a lot in a little amount of time. Everybody give me 30 seconds. Sorry, I'll be right back. Okay, thanks for holding on. There's some magical power that things need my attention whenever I'm doing the live stream. I don't know why that happens. Mount Doji says, story of my life. Well, let's turn that around, Mount Doji. Concentrate. I know it's easy in trading to concentrate on the negative things that happen to you, but try to concentrate on the positive things too, right? Like oil, that was a big hit today, but let's look at the glass half full. It was a half position, so give yourself some credit for the things that you do that are positive and the good moves that you've made. Dr. Jorgensen says good dividend on the yield. Yeah, actually, Philip Morris dividend is 5.3%. That is one heck of a dividend. All right, so this does look decent. Above 50 RSI, nice V1, V2. Rejected these moving averages. It's a bit of a safety play. It's up today. All right. Man, I have so many things I have to do here in just so little time. So let's take a look. But that's the thing with trading at the end of the day. You want to wait till the end of the day to make your decision. But then you have all these decisions to make. So I think what I'm going to do, I'm going to go ahead. I'm going to lock in the profit on Visa, because that does look like it's going to close above the 50 RSI.
Order filled.
All right. And then this Visa over here. So that was a nice trade.
Order filled.
All right. Google's above. I'm going to go ahead and I'm going to buy my SPY just to get a few of these trades out of the way.
Order filled.
All right, there's SPY 1. There's SPY 2.
Order partially filled.
CGC, I'm going to have to get out of CGC.
Order filled.
Okay.
Order partially filled.
DDM.
Order filled.
We're going to have to get out of that.
Order filled.
Boy, busy today with this. Google, looks like we're going to be able to keep it, folks. Unbelievable. IBB, we're going to be able to hold that. Silver, we're going to be able to hold that. SPY, we did buy that, right? Let me see here. SPY, yes. And SPY over here, yes. We did clear out our Visa. All right, so that takes care of our current positions. Going forward, Apple, Google, we know about that. Intel, it's going to be close. And then Philip Morris. So I'm going to go ahead and I'm going to buy Philip Morris right now. And then we'll take a look at Apple at the very, very end. So Philip Morris.
Order partially filled.
Okay, and then Philip Morris over here.
Order partially filled.
Okay.
Order filled.
So Philip Morris is taken care of. Intel. Oh boy. Question is, do you want Apple or Intel? I think I would go with Apple, to be honest with you, just because it's not as far down and it's above 30. So it does look like we're going to be able to buy Apple. We've got about 1 minute left. And does it look, is our price there? It's going to be very, very close. 179.70. Ooh. Now it's under. what do we have? We have 30 seconds left. Looks like it's okay. Let's go ahead and pull the trigger.
Order filled. Order partially filled.
Whew, folks,
Order
that was some trading there.
Order cancelled.
So 179.58, and it closed at 179.66. So we're good. We are good. So we got out of CGC, got out of DDM. We're able to keep our Google. Unbelievable. We're able to keep our IBB, silver. We had those profit targets. We bought SPY end of day, and then we closed out our short position on Visa because we hit the 50, closed back above it. So, all right. So listen, before we get to questions and answers, I do want to let everyone know that I offer private one-on-one teaching and coaching trading lessons in the evening time via Skype. So, if you feel like some lessons with me would help you with your trading, please, contact me, send me an email. Generally what I do is I have a quick call or Skype call for free with potential client. We just kind of talk about their situation, what they need help with trading wise, and how I can be of benefit to them. So, if that's of interest to you, my contact information and my daily rate or my hourly rates are in the description of this video. And then also, if you learned something today in this video or you enjoy the channel, I would really appreciate if you would hit that like button because it helps with the rankings and lets more people on YouTube know about this channel. So if you could do that, I would really appreciate it. So, okay, enough of that. And let's see if anyone has any questions about today's activities or anything else. Mount Doji says, we'll turn this around. That's right. It's important to have a good mental attitude, Mount Doji.
Order cancelled.
Lots of positives still from the week. Could I get your thoughts on Cisco? Maybe VTV as well. Yes, for sure. So let's see. Let's look at Cisco first. Okay. Well, the good and the bad, I mean, we had this big, nice, strong day on Cisco. We had a really strong gap. It was able to hold the gap, which is a positive technical indicator when you're able to hold these gaps for 3 days. Today, though, we did come down. Just see the green line here. That's the low of the gap up day. We were able to test it and close back above. That is a positive sign. It is a positive sign, but it's a 47.45 RSI, and it's under the major moving averages. So, that's why I did not take this trade. There's some positive things about it, some negative things about it. If I did take this trade today, how would I approach it? Well, I would just approach it as a close back below the low of that gap up day would, on a closing basis, would be my stop, and a move back up to these highs would be my potential profit. So, but I don't like how large. See, this bar looks large, right? But in reality, it closed here. This bar is this large. In reality, this is how big the bar is. So it doesn't look as bad when it just looks like this. But remember, yesterday's closed here, so the bar is this bar. It's a monster bar. So I don't think I would be doing anything personally with Cisco, but if I did hold this position, it's good that it did hold the low of that previous bar, and I would get out with the closing price below the low of this bar here, or this green line. All right, and then let's take a look at VTV. I don't know what that is. First Hand Technology Value Fund. Well, I mean, this is really obviously in a downtrend, right? I mean, if there's been anything in a downtrend, I think this is it. I mean, this is just brutal. Every time it's had any kind of rally, it's immediately got sold into. It's a 2273 RSI. So, I don't think I would do anything with this, Mount Doji. I don't think there's anything positive here whatsoever. I mean, at the very least, you would need to have a close back above the 30 RSI, but I am certain that any type of significant rally is going to get sold into. So anyway, I hope that helps, but at the very least, the close back above 30 is the first, at the very least, would have to happen for me to get interested in this. Okay. Let's see. Does anybody else have any questions or any comments? Bruce up here said put on Amazon at 200. So let's just take a look and see what that would pay. And if you're not familiar with selling puts, this might be a good example. So what Bruce is saying is, he's saying I would probably be interested in buying Amazon down here at this 200 day. But if it gets there, then I'm obligated to buy the shares at the 200-day moving average. If it doesn't get there, at least I'll be able to keep the premium. So so we wouldn't do Friday. We do a week from Friday at 1756. So let me see what that would pay. 17. Well, there's 1755, so let's use the 1755. Boy, that's amazing. If you said, I am willing to buy Amazon at 1755 next week, if it gets there. If it does not get there, you would get paid $1,100. And if it does get there, you would keep your $1,100 and you would also buy it where you wanted it anyway. So, if you said, I'm buying it down here no matter what, why not sell a put? Because, in the meantime, if it doesn't get there, you make $1,100 expiring on the 31st of May, so not tomorrow, but the week after. I mean, that's a huge amount of premium, $1,100, and you have 3.3% protection to the downside. That's a monster. That's a monster premium that you get. The only downside to that, though, folks, is that you have to buy, one contract equals 100 shares of stock. So, you've got, let's just show you, 1755 times 100. You'd have to have $175,500 to make that trade. That's the only downside. Oh, did I type in the wrong VTV? That's what I'm typing in, VTV. Oh, that's my dyslexia, Mount Doji. I put TVT. All right, so Vanguard. It's similar to the indexes. If I were in this trade currently, what would I do with this? If I was in this trade, I'd probably hold it until the 200-day, until it lost the 200-day. On the other hand, if I was not in this trade and I was looking to get in this trade, I would look for a close below the 200 and a close back above, or to the upside, if it started to move up, a close above the 50-day moving average. Remember, there's buyers to the downside, there's buyers to the upside. You just don't want to be caught in the middle of a void, a vacuum of buyers. There's buyers just waiting for it to get up here. There's buyers just waiting for it to go down here. But right here in the middle, I think buyers are on strike. Johnny says, do you ever take into account the total market drop when evaluating an individual stock price drop? For example, your target stock dropping only 1% when the market drops to 2%. 100%, Johnny. I do that all the time. it's called relative strength. So let's take a look. So let's see, the Dow was down 1.11%, but then there are certain stocks that were actually up on the day. So the relative strength of Philip Morris was very strong, right? It was actually up on a down day. And if you look at Intel, the NASDAQ was down 1.58%, but Intel was up 1.2%. What does that tell you? I mean, that tells you that the relative strength of Intel is way stronger than the market. So, if I have two identical setups, like let's say they're absolutely identical. You have a V1 or a V2 and it closed below the 200 and closed back above the 200, and one of them is in line with what the market's doing. It's up, let's say the market's up 1% and it's up 1%, but the other one with the exact same setup is up 2%. I'm always going to take the one that has the stronger relative strength compared to the market. And if you flip it over, if you're buying a dip buy and you have the exact same scenario, one went under 30 and back over 30 RSI, and the other one went under 30 and back over the 30 RSI, under 30 RSI, over 30 RSI, and the market's down 1%, and with one of them the market's down 1%, but the other one it's only down 1/4%, then that is also relative strength as well. And if I'm shorting something and the market's up, the market's down, if I'm shorting something and the market's down but the price is up, that's not really good. If I'm shorting something where the market is up but the price is down, that's also negative relative strength. So yes, I absolutely 100% take that into account, and I believe you should too. Hey, thanks, Bruce. I will have a good hike. Does that make sense, Johnny? Well, it was a red day for me. I did have 4 up days in a row, which was nice. Actually, it wasn't even that bad today, to be honest with you. But I was hoping to make that a string of 5 days. But so we did buy Apple. We got out of CGC and DDM. We were able to hold Google. We were able to hold IBB. I did enter Philip Morris. We're holding on to our silver position because it went our way so nicely. I did buy the SPY position. I did get out of oil. Oil was the big bummer of the day and hit my emergency stop. And I did cover Visa for a nice profit to the downside on a short. And that was the first short I've ever done on this particular podcast. I mean, I do short, but not that often. But, sometimes the market goes down too, right? All right. Okay, everybody. Well, listen, I appreciate you coming by. I really do. I mean, for you to spend an hour out of your day, out of your busy day, to watch this channel, I'm really happy that at least you find it helpful enough that you're able to spend this time. And if you have any other questions later in the day that you can't think of right now, feel free to email me. My email is in the description in this video. And so tomorrow is Friday. Hope to see you then during the last hour of the market. And then Monday, I think, is Memorial Day, so we'll have a day off. What are we going to do? So anyway, thanks again, and I hope to see you tomorrow. Have a great rest of your day, everybody. Bye-bye.
U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.